Chris Frostad. How are you, sir?
Very good, Matt. Ready to go.
Ready to go today. Fantastic.
Ready to go.
Well done. Well done. I assume the weather's nice there because I'm just
the sun seems to be beating down in your part of the world. Yeah.
I look like an Irishman in midsummer, don't I? Just pale, pasty white. It's the sun beating down on me from outside.
Yeah.
I apologize to anyone watching this. May I suggest you go to the podcast immediately?
I think we could spot you from space right now. Yeah.
That's not good. It's not a good look. Yeah. Right, today there's the markets are getting a beating at the moment for sure. Tariff talks seem to be taking over, but we're not going to do that today. No, not us. We're going to talk.
We have other distractions. Yes,
we've got other distractions, and it kind of remind, what we're going to do today is it kind of reminds me of that Bill Hicks joke, where he said, he talks about he was hungry, he was alone. He's eating a small sandwich in one of these diners and he's reading a book, and the waitress walks up to him and says, "Hey, what you reading for?" And he's so surprised by this question. Not what are you reading, but what are you reading for? And so I thought that was brilliant. We are going to read from a little red book today, and we're going to maybe hopefully learn a thing or two. And you're going to tell us all about it. So as a uranium investor, we're concerned about energy solutions. Is nuclear part of that? Is the engine feeding that nuclear energy, the uranium world, getting things right, or is it getting things wrong? And have us investors got something to look forward to? So without further, and there's a lot to talk about, believe me. Why don't we kick off, maybe tell people what this little red book we're talking about is? What is it?
Well, and there's a few things we look at. So we're and investors look at. So people in the biz, the World Nuclear Association puts out numbers on a somewhat regular basis. I think the last time I was looking at projections from them, it was near the end of 2023. But earlier this week, the Red Book came out, which is it's put out by the Nuclear Energy Agency and the International Atomic Energy Agency. And they put it out every 2 years, and it's data and information and analysis of global uranium production and resources and demand, and this is where the world is heading. And so it historically has been a bit of a Bible in our industry as to what did they find, because the thing is a bit of a tome, and but we've got issues with it.
Sure. Yeah, we do. We got to work out whether this book is a work of fantasy and fiction. That's not a Bible reference, guys. That is what could be for some. Some people may be complete atheists. That's fine. All types of investors welcome. It feels to me like we need the kind of truth out in the marketplace to help investors actually do some investing. I read that book back in 2023, and I walked away in slight disbelief at some of the data that they were using and some of therefore the conclusions that they were coming to. And that's kind of formed a rather kind of skeptical view of the ability of companies to produce when they say they were going to produce at the volumes they say they were going to produce and within the timings that they were going to say they were going to be able to produce, which kind of strengthened my thesis, my investment thesis for investing in the uranium space. So has much changed since 2023?
Well, yeah, I think the one thing that stands out is the fact that they analyze and look at data up until the end of 2021 to create this book. So wow. the data is already three some odd years out of date, and as we all know, a lot's happened in the last 3 years. And the same with the WNA report. I mean, it came out, like I said, at the end of 2023, and we've all used this chart and seen it, where you've got your demand going up, and they've got an upper and a lower range scenario, and then they're building these blocks underneath of where the supply is coming from, and here this thing came out at the end of 2023. In 2024, what they were projecting coming out of existing mines was already 10 to 12% below what they projected, like right out of the gate. And them, like in the Red Book, they start to stack up existing mines On top of that, they stack restarts of mines that they see coming online. On top of that, they stack development. At some point in time, all of a sudden, people that are developing uranium mines now, they'll be coming into production. And then on top of that, they've got proposed and planned and fairy dust and unicorns. So it's when you start drilling down into some of these numbers, particularly knowing that they were, they're using data that's 3 or 4 years old, it's you start to see that these numbers are not even close to being, what we would have expected to see. And it comes down to, and this is what we've been saying, and I've heard you say it before as well. This isn't a buyer or seller's market. This is, even if we add another reactor anymore, this isn't a demand problem or demand story. It's a supply story, and it's a structural problem, not a cyclical problem. So we've got this structural issue of supply that no one is really addressing right now.
Okay, we'll get into structural supply deficit conversation in a second, because we can pick apart some of the things that you've mentioned and others here. But this really is a case of show me the incentive, I'll show you the outcome. You've got industry personnel being paid by industry to come up with these reports. They're taking stuff as fact, putting them in document, coming up with conclusions which are not helpful, shall we say. And so I'm not, it's not helpful that the industry participants like uranium companies are essentially funding by subscription or otherwise, the report writers here. It really is deeply unhelpful, I think. You have to read between the lines as we have done and say, well, look, if you don't believe the numbers as advertised, the argument gets really strong. And that's what I think you and I talked maybe a couple of sessions ago about. You say this is not a demand problem, because if demand doesn't increase 1 kilowatt going forward, it doesn't matter. We've got way enough demand, more than we need. The problem is going to be trying to understand, can uranium companies, either current producers or restarts or near-term startups, or some of these more advanced developers, or even some of these exploration companies eventually, can they fund their way through to a production solution? We're seeing a few things this week, and I'm going to go straight to the big one. Mr. John Borshoff, he's saying we will not be advancing the build of the plant because there's no financial incentive to it. We'll carry on doing work on the ground, but we're not going to do that. We've seen lots of companies produce like Paladin, last quarter of last year, struggling to hit their numbers. We've seen advanced developers like Bannerman just slowly kind of creeping forward again, looking for that price incentive. When you see a market like that, you think there'd be a kind of a reaction in the market, but here we are with spot price at 60, the kind of cloaked activities of these term contracts, and utility companies who just don't really seem to have a problem with what the landscape as they see it. So how do you operate in a market like that?
Well, it's difficult. It's a head scratcher, because and again, we've said this time and time again, we don't get access and really see the economics of what is going on the ground between the utilities, between the between the Camecos of the world. I mean, there's a handful of these uranium companies that are writing the contracts, so they obviously know exactly what's going on from one day to the next, and how to manage, how to sail their boat. But those of us that aren't, either the explorers or the developers who aren't sitting down negotiating contracts right now, don't have that visibility into what's going on, and where there is inventory, and where it sits, and where it lies, and what those conversations are. So it's and then on top of that, then to pile what you're saying, to pile these reports on top, that if you scratch the surface, you can see that they're misleading. It really makes it tough to aim the boat in the right direction.
Yeah, I mean, I struggle to believe that utilities, the buyers, at utilities are relying on these reports, solely on these reports, and they're not reading which way the lines. Because if they were entirely relying on what they read, maybe
Well,
that would
they're the
explain.
source of some of this information,
Yeah, well,
as
they
are
are
the
the source.
producers.
That's true,
As
but
are the producers. So,
but again, the incentive of the producers to talk a good game is that they don't want to affect their share price, right? So they're not exactly incentivized to tell the truth about what the future is, because their
exactly.
valuation is determined on what they say the future looks like. So that's not good. The utilities, but are a different proposition entirely, because they can tell us about the kind of demand side. They can maybe even help us with understanding what their inventory levels are. But what they can't talk about is whether uranium companies will get into production on time at the levels they've suggested, at the volumes that they've suggested, or not. And uranium companies are not to be believed because they're incentivized in an entirely different way. And I think that's my whole well, it's the opportunity, but it's also the problem for the sector, because it's almost like it's a self-fulfilling prophecy of, because the uranium producers and developers are not telling the truth, the utilities is behaving a certain way, which means that the price isn't moving, because utilities think they've got time, because there will be enough volume of this stuff's coming through. So it's kind of
Yeah, and the spot price isn't supporting the story we're telling.
Yeah.
Which is challenging. Yeah.
Right.
Yeah.
Okay. So what's to be done? So we're saying the data's wrong. Okay, great. So the conclusion there is that supply is the issue. Supply is the issue, not demand. And the supply, if supply is in short supply, it would suggest there should be a reaction in the price of uranium. There has not been to date. If anything, it's gone the other way in the last 6 months.
There's been no visible movement in the price.
Okay. I'm making the mistake of pointing to spot, but spot seems to be drives the sentiment in this space, right? So I don't know what price contracts are getting signed at. Do you know?
No. Well, we see that it's at $80. It's been pretty consistent for the last 3 months, but we get that number once a month. It's been steadily ticking up. I mean, if you take the spot price graph out of the picture and you just look at the long-term prices that are reported every month, over the last 2.5 years, it's gone very nicely from $50 and ticked up to $80.
Right.
That's nice. $80 appears to be the current incentive price that people talk about for the most part. So that means that all of the shortages and lack of access to this stuff that we talk about isn't really baked into that price yet either. We're not looking at a price that is being driven up by shortages yet. We're just looking at a price that is necessary to start a mine up.
Right, but I'll go back to two mass. I'll go back to Deep Yellow. I'll go back to Bannerman. I go back to I guess even Lotus. I'd put in that category. You go to Global Atomic. There's a lot of development plays which don't seem confident in being able to raise capital at $80 term price. That tells you that maybe that's not the incentive price in reality. Maybe that's let's get something signed, a term contract signed to maybe give the market confidence, but we're not going to right away, write off 80% of our supply at $80.
Right, and it's also not a price. It's also not a price that has any contingency built into it. I mean, if you got to be able to withstand some movement in that price before you're going to turn a mine on. For sure.
Okay, so it's difficult out there, is what we're saying.
And that's the other thing that the Red Book did come out with. I mean, is that and even using their data, is that price, the cost of getting these things out of the ground is now increasing, right? So the number of the resource, the amount of resources that are mineable at under $60 US a pound is, shrunk drastically. So the costs are definitely going up in terms of what we've seen, in the last 5-10 years.
Well, okay. Well, let's talk about the different types of producers or developers. Okay, so we've seen some issues recently with production levels over at Encore, right? So, and also Peninsula struggling to kind of get their act together as well. And look, Peninsula, if I talk to people in industry, they've got a really good technical team there. These are not, guys learning on the job. Wayne Hiley is really well regarded technically by industry. He knows what he's doing. Paul Goranson, hugely, respected in the industry. ISR should be cheap, should be high margin, even at these sorts of levels. But it's not easy. These guys are struggling to get out of the ground,
again,
let alone economically, right?
Go back to these reports. So these reports are almost assuming it's easy because they're assuming that all of these projects are coming through on time and on budget. And the fact is, these overruns and delays are normal in this industry, in the mining industry, let alone the uranium industry. They're not an exception. So not to, first of all, work those assumptions into that there will be delays, there will be overruns, there will be issues along the way because it's mining, for crying out loud. First, that's the first problem they've got in reporting these numbers, is just this assumption that everything's coming through on time, on budget, as reported by those companies that have everything to lose by working those things into their numbers. We're not powering the future with PowerPoint decks. It's
okay,
got to
so
come.
ISR, it's typically the margins are better with ISR generally, but we're finding even those are struggling. We're struggling to get out of the ground. You've got to think people like Denison trying ISR, but they've kind of got to have freeze walls involved there. So technically, that's hugely complex, but that they might be able to solve for that problem. They think they have. Kazatomprom supply drop-offs, significant drop-offs. You got to replace the stuff that they're struggling. And these are guys who've been at it some time. Kazatomprom, market leaders in terms of volume, certainly, and in terms of knowledge, etc. They're struggling, so it's getting harder. We like it. All these are good things, by the way. If you're an investor and you're backing a company that is able to produce, I think that it's a good thing. Just think positive thing about these things. These are bad things, but they're positive outcomes if you're backing the right horse. We'll come on to early stage developers and explore.
Well, yeah, I mean, remember there was nothing better for the uranium in the market than when Cigar Lake flooded.
Yeah, you did. Well, but it kind of was, right? It kind of was, because I if I look back now, and I said this to someone else, it was a fund manager in the UK. Asked you what my thoughts on the matter, and I said, look, if I look back now, some of the conversations I was having in 2019, 20, it was a lot of chat, but it's kind of clear to me now that some of these wisely and sagely individuals knew sod all about the energy markets as a whole. They certainly, didn't have as much information, and there's some big assumptions being made about the nuclear space, about uranium and inventory levels and the way it was traded, and how quick this thing would react. So this is this energy solution has been around for a while, and it was kind of obviously big in the 50s and 60s and 70s, but a lot of the people who knew what the hell they were talking about started leaving in the 70s, and with hindsight, it was easy for me to go back and go, actually, a lot of you guys just making this shit up as you go along.
That's a big difference.
Wrong,
I mean, we
wrong.
saw that when this thing was coming around in 2004, 2005, 2006. I look back now and we were all talking garbage because nobody knew, nobody understood the market at all, because nobody'd looked at it for 20 years. And now, I mean, the conversations now are far different, far deeper. There's a lot more understanding in terms of the limitations of what we can talk about. But I mean, it was tough back then because nobody knew what they were talking about.
Man, okay, you can go back that far. I'm going to go back 2019, 20, and quite 21, quite frankly. Honestly, some of the people, commentators in the space, they literally, you want to maybe remove whatever information you put out in the market from that time, because it just shows that a lot of people are learning on the job, right? So, yeah, we feel a little bit sophisticated today, and maybe we'll look back 5 years' time and go, actually, no, still clueless. this market is a way of sort of waking up and choosing violence. It seems. So, so right. Okay. So what we're saying is on the supply side, this red book data that you've looked at, it is suggesting that the market doesn't really know what the implications of
It's
this.
it's suggesting that we're in a tight supply market,
right?
But it to me it looks more broken than tight.
Right.
And you can look at the various things.
What's that mean?
Well, I mean, start again because the data kind of ends at 2021. We know they're in a bit of a loophole. They so the first thing they start stacking up on top of producing mines is are these restarts, and MacArthur River started back up in 2022 after the report, and they're not up to full capacity yet. They're still ramping up. Honeymoon's only produced about 50,000 pounds since then. Langer Heinrich was in there to start up a new mine. They were supposed to restart theirs. They were supposed to do originally 6 million pounds this year. Then it got downgraded to 3 million, and now it's closed completely. So, these restarts have not saved the day. They haven't been at it. I mean, when I came out of the gate, I mentioned the fact that even the producing mines are coming up short based on these projections. So when you start looking at the restarts and pinning your hopes on that, they're not coming through either. So we're into yet another shortfall. Absolutely. And then
you know what worries me? It's like coming back to this kind of like people making shit up as they go along. But playing the market was what some people was very successful. If I looked at UEC, I'm going to name names. If I look at UEC, there's a company that's produced one drum of the yellow stuff in that time frame. Spent a lot of money, raised a lot of money on the hopes and dreams of being a massive producer, building a massive portfolio, and one drum. So they were, or I guess depending on who you are, would you say, oh, they're the poster child of this industry? Maybe NextGen could claim that as well, but then NextGen have got their problems as well in the sense that they're going to have to go and raise $2, possibly $3 billion in this market to get going. So do they need to go big, or do they need to maybe review that and start smaller, or do they hope and pray that someone comes and takes them out? So there's been a lot of market action to the detriment of actually getting on with the business of building a goddamn business which actually produces the stuff. So, as an investor, you can play it any which way you want. I'm not pointing fingers at investors that, I'm sure they walked into this thing with their eyes open. But as this industry, it's been hugely damaging when you've got these models. The most successful models in the space are ones where it's predicated on not producing any pounds.
Well, here's another nugget. I mean, the Red Book only comes up with 3 committed projects that they're relying on to be in production by 2026. And one is Elcon out of Russia, which has since been sanctioned and delayed. Another is Imoran in Niger, which has been mothballed.
Yeah.
And the third was a Tango in Namibia, which still hasn't got its financing together, and construction. There's no construction date for it yet. So those are the committed ones. Beyond that, they're rolling out numbers in terms of planned and projected and prospective numbers, and so we're not even getting out of the gates safely in these projections.
No, I'd say anyone listening to this who doesn't know Bannerman or the Tango project, that's something I do have some faith in, because they've got whatever, $70 million in the bank, and they are slowly moving things forward. But they seem to be one of the most advanced stories.
Absolutely. But my point is that the numbers that are being projected from 2021 haven't really properly categorized the expectations of that project.
But also here's one for you. I think from 2021 onwards, I think a Tango had downsized the size. They were looking at 7 million pounds, and then they created a Tango 8, which is a smaller, like 50% scale version.
About 3,700 tons, I think.
Yeah, so it's like 3.5 million, something like that. So still big compared to most American, projections for companies over there. But yeah, so even that number is wrong. It's not 7 million, it's 3.5. So there we go. Okay, so I'm trying to work out the value of a book which uses data which is 4 years old. Quite frankly, I know you need time to analyze this stuff, but my God, not helpful. Was there anything useful that came out of that book?
Well, holistically, it does remind you where everything is, and I mean they are doing. Like I said, the cost numbers were interesting to see that they've changed drastically. But again, it was if you read the book and took it at face value, then yeah, you think you've been educated in terms of what's going on right now, but it's not. I mean, one of the other numbers they came up with in terms of primary production by 2030, which we now know is less than 5 years away from now, is supposed to be up 66%.
Oh boy!
And again, that's based on assumption that were made from data that's 3 years old, and contained a lot of expectations around existing developers. Whereas today, I mean, half the developers out there haven't even put out a timeline to production. Right? They're working on their projects. They're advancing their projects. Everything's fine and dandy, but many of them just haven't put out a date yet. So these wise people have had to make some assumptions and roll forward.
Okay. So just summarizing some of these things. So I think there's a massive reliance on producers like Cameco, Kazatomprom, and Iran, all of whom have had their own issues. Care and maintenance and flooding with Cameco, Kazatomprom, their production numbers dropping off the face of a cliff. Irano effectively thrown out of Niger, and very few of these have invested into exploration and development over the past few years. Maybe because the market was not even to them not good for them in the sense that they've got to watch their balance sheet. But that's come back to bite them on the ass, the way that things have played out, geopolitically, the way things have played out with obviously COVID, etc. And those are the guys who could. What chance was there for anyone else? I have to say, very little. Yeah.
Which lands us where we are today. Still wondering why we're not seeing, this fractured supply chain. In the prices, in our uranium price, in our visible. I mean, as much as we like to say, don't look at these prices, don't look at, because they don't reflect the real market. They should have a little bit more semblance of reality than they seem to be, but they don't. So
well, that's kind of the same problem for like across all metals, isn't it? I think gold. The big gold manufacturers are manufacturers, but the gold producers are focused on M&A, mergers of equals. Not then as in M&A with someone, an existing producer, joint venture with other producers, no new ounces. Same for silver, same for copper. It's, and the junior companies with not a big balance sheet are the ones being relied on to kind of make discoveries and maybe give the sector as a whole, natural resource sector as a whole, a chance to kind of survive. So it's I think the sector kind of needs to think about how it operates more broadly.
Well, true, and I think that was one of the reasons cited as to why the costs are increasing on these, and there's fewer lower cost deposits out there, is because the stuff we're looking for now is harder to find. It is more expensive to find. It's more expensive to mine and process than the stuff that they're mining and processing today. Yeah,
it's more expensive. It's lower grade. It takes longer to go from discovery through to production, and the money's more expensive.
Mm-hmm. Yeah, well,
and the risk seems to be heightened.
Next gen, right? Next gen will be 14 years from discovery to if they go into production in 2030, which is the number they've got out there right now. That'll be 14 years.
Good luck. Yeah. So I believe when I say it, sort of thing. And all those other things, like we've had this kind of a resurgence of ESG and all of that, permitting, licensing time extensions. We've had geopolitics, NGOs coming in here. It's a much more complex environment, mining broadly, to operate.
Right.
It really is for something so essential. One would argue. Costs have gone
Well,
up.
here I'll give you, and here's another thing I was looking at was the they rely quite heavily on the technical reports that are being put out, right? And you can't in terms of, not that they're not truthful, not worth saying, but I mean, take Cigar Lake. Cigar Lake has always operated between 10 and 15% below the capacity that's out in their reports. Kazatomprom the same. They're always operating at 75 to 90% of their capacity. So, to see people projecting things based on, and that'll always be the case. Take anybody's technical reports. All the developers, look at any of them, and they tell you what they can be producing. That's the maximum they could possibly pump through these things. It's not. It doesn't reflect reality. At the end of the day.
But isn't that the problem? It's not a case of, best guess. Yeah, it's best. It's presented in a way which puts them in the best possible light, and that's what they get value.
Not the best guess. It's the best possible. It's the best scenario, the best outcome that could possibly happen. I mean, it's not like nobody's guessing here. But
you are. The stuff's underground. You think you've drilled a few holes in it, and you try to make an assumption, and you are extrapolating, and therefore it's a guess, guys.
By the time you get to a feasibility study, you're not guessing anymore. You know what's down there.
Please, I've spoken to funder. I've spoken to industry in which this is an old story, but over about 3 years. But I was speaking to one guy who has built 5 mines and funded more than that. And I said, "Would you do this weekend?" He said, "I've just been through 35 definitive feasibility studies, about 5 of which I think have got a chance of actually producing economically. The rest is a work of fantasy." So I know you got to,
but to call it a guess, that might be a little harsh.
Well, but you look at how many companies have kind of fallen over in the last 2 years as part of the the not just the financing but the kind of build process, and past the build process as they kind of ramping up as they're operating, and their costs are going up and up. They're not producing as much, and things technically fall over. They don't get the recoveries that they want. It's coming back to it. Mining's hard. I get it, but when I say guess, I'm going to stick with that word guess. You can call it what you like, because you're trying to work out what you're going to find underground, and you've got a pretty good idea. Yeah, but don't tell me there's any certainty around that. Right, that's my view. Look, I'm investing in the space. I'm not against it. I just think you got to be realistic what you walk into. There's, even at definitive feasibility stage, and even when a company's up and running, there's still ways of falling over. And we've pointed to lots of companies like Novo Resources and Woolbridge and Pure Gold and Newfound Gold and all those wonderful people who are at varying stages of their journey, and it's still possible for things to fall over, despite what the market says. Right. Mm-hmm. Mm-hmm. I'm gonna hate mail for this. Gonna get abused for this. So what do we do? What is this? What can we do as investors? How should we think about this?
I think you kind of said it before. We know that Orano and Cameco and Kazatomprom are the ones that do it and can show that they can do it to the extent that they're doing it. Are really the most reliable ones you're going to be able to look at. I mean, the rest of it all is, until these developers can prove that they can actually, build and operate a uranium mine, we're kind of along for a ride here. But what we do know that it's not going to be, we're not going to be surprised with something being better than we expected. We're not going to be, people suddenly find out that their resources, they accidentally got it wrong and they've got twice as many resources as they thought they did, or that the costs were actually half of what we thought they would be. The risk is always on the downside in terms of that. So to the extent that it comes back and affects price, which is again what we're always watching, what the retail market is watching, it's the same story we've been telling for too many years. It's coming. We just don't know when. but it has to, because it's broken. I believe right now it's broken, and we're we can't produce the uranium that's required for where we're at right now. And as much as people want to say that we're going to get there and we're going to find this stuff and develop it and produce it, we're not seeing any signs of that actually happening. So the availability of the fuel to run these things is not visible, and it has to come home to roost at some point.
But wouldn't it be nice to actually I understand the market for consolidation and acquisition and joint ventures and all of that, and there's an investing strategy to that. So I don't have a problem with that per se. I just would like to see more companies focus on the get to production. Show us that you can produce. So answer that technical question. We can worry about how you make it more efficient over time, and improve those margins, etc. But show us technically you've got the team who can actually get the darn thing, get something into production, and sell it into market and get the kind of contracts that you need for now. That would be a beautiful thing. It's how most other sectors are judged, but uranium seems to have found a way of avoiding doing that.
That makes a lot of sense. That makes a lot of sense, and you're right. And this sector has avoided doing that. We've had way too many things to blame for not getting on with it.
It sounds like a kid. Like, why haven't you done your homework? My dog ate it. My left it in the car, or whatever. It's like, oh, guys, you must have run out of excuses by now. We're at that point where the rubber's going to hit the road. If it doesn't, the sector as a whole has got a very difficult conversation to have with about where it sits in the energy market and its ability to compete with other solutions. Yes, cheap baseload, but if you're not producing it, I don't really kind of get a chance to test that hypothesis compared to natural gas, say, which can ramp up in the space of 2 years, right? They could their fields which can double production in a 2-year time frame. You may think that's fossil fuel. Whatever you view, the point is it's there. I think renewables is kind of at that point where perhaps it's. I think it's going to be hard to justify the kind of spends there without the huge subsidies which have been involved to kind of get us to where we are today. Coal, quite frankly, comes back into the equation at this stage if we don't get our act together. So do you know what I mean? So I think you're going to see nuclear's role transition from contender to leader. And I think it's got that potential in terms of return on capital invested, return in terms of energy produced. It should be there, but it's just we, the uranium guys, are not delivering on that front. I don't.
We have to hear it out of the industry. I mean, there is a structural deficit, but we're not being told that by the nuclear folk. We're not being told that by the utilities. We're watching a price that is not dependable, and for signs of life that isn't providing that heartbeat. And meanwhile, everybody's hand waving to some supply gap, and we're not hearing. Nobody's shooting up a flare on the other side, on the demand
I don't know.
side.
I'd say the nuclear industry is there's lots of commentary from the nuclear industry that I read. Subscribe to a few things, and I read that the problem is when people think that the utilities are in the nuclear industry, they're not. They're in the energy industry. They can choose any number of sources to supply the energy to their customers, right? So then they are in it to make money, and if nuclear allows them to do that, that's great. If nuclear doesn't, they've got other alternatives available to them. I think that's what we need to be cognizant of. So I think nuclear industry, is clear 100% that Red Book and WNA and all the rest of reports and out of date data doesn't help. But there are industry personnel, I think, who say like, come on, we need nuclear. It's a big part of solving the problem globally. What we've got is a utility Right,
Yeah, but you're
until
not
it
seeing the
bursts.
utilities shutting down a reactor
No.
and saying, okay, we're going to move all this over to natural
There's a
gas, or we're going
cost
to
to
move this
that.
elsewhere.
There's a cost to
Pardon?
that. There's a
Okay.
cost to
Well,
like
of course
closing
there
down
is, but
nuclear,
that's what
and
we're not seeing. So
you
what you're suggesting is that there are alternatives for these
there are.
on the macro sense. There are alternatives. If nuclear isn't going to work out
Yeah.
from a cost and fuel perspective, then we'll just move to something else. We
Well,
haven't seen
they
signs
are.
of that.
But don't forget. This isn't a case of somebody's going to replace nuclear. We need all of the above right now. There have been talks about shutting down nuclear reactors across the US, and we've talked about extensions for the last 2 years, and some of those things are happening, which is great. We've talked about SMRs kind of coming in as well. So nuclear is very much part of the conversation. We've seen that on a cross the aisle basis in the US House and Senate. So it's still part of the conversation, but there needs to be a right. It's black or white, but at the moment it's a bit grey. Black or white is okay. This is not going to work out. We're very uncomfortable with what we see with the uranium space. Let's shut that door. There's a cost to shutting down nuclear reactors. Maybe they can be modified in some other way to something else because all the infrastructure's there. I don't know. But we're not at that point where that definitive decision needs to be made because of factors like the Red Book suggesting that maybe it's all going to be okay. So, I don't think utilities are going, oh, we're going to replace nuclear with renewables overnight. They don't think that dumb, but the increasing demand, increasing amount of energy required globally is definitely happening, and so instead of shoving in a SMR, will they shove in, I don't know, wind farm, solar, coal powered fire station? I don't know. The point is, no one I speak to knows the answer to this.
That's right. That's what
I'm going around full circle here, and I think my question I keep asking is, can this sector just sort itself out? It's got a massive opportunity in front of it, and it's just been paralyzed with financial issues. It's been paralyzed because it's not going to be able to, get utilities will not pay what the industry needs. Access to cheap capital is hard to come by, and so I can see why people get excited when they talk of all these tech companies coming in solving our problems. I can see why people get excited about that one because they've got more money than Croesus. So yeah, I'm just asking questions.
There we go.
Frustrating, Chris. It's just
So where's that leave us?
Where's that leave us?
Still staring down the pipeline of what's coming at us over the next few years, and who's going to be around to enjoy it or not enjoy it.
Well, is there anyone out there that you're looking at and going, do you know what, these guys will be just fine? Because in markets like this, the little guys get bust up, they get rolled into something else. There's a JV, so it's just a case of surviving rather than moving forward and actually building something. So who's going to survive?
Well, right now, I mean, the only really safe bets are in terms of survival are the big producers that are there now. To your point, until the developers start to demonstrate the technical capability of actually producing something, I think they're going to always be at risk until something's actually coming out the other end of it.
Is that why you've kind of cozied up to Cameco and Orano?
Well, of course. Yeah, of course. They're, it's the people with the balance sheets, people with the money, the people that are going to be here. I think, anybody who's going to survive this has to know how they're going to make it through the next 2-3 years. We can talk about the supply deficit. We can talk about when it's going to present itself in terms of pricing and in terms of flares being shot in the air. But until that happens, it's going to be business as usual. And we've got to make sure, anybody that's in this sector right now has to make sure that they've got a clear path and a clear capability of getting from here to there, that they're not relying on a Hail Mary. They're not relying on the price of uranium changing drastically, that they actually have got legs to get them through the next few years, to hopefully move soundly into the type of visible deficit that we keep talking about. And that's, and again, that's why we do what we do, the way we do it. We're working with bigger companies that have got a longer runway ahead of them. like you say, Cameco or Orano or ISO Energy or Foran Mining or whomever. These are companies that are well established and well set up financially to maneuver through the next few years. And we've been able to hitch our wagon to them in a very constructive way that provides them with value, and it provides us with value, and it provides us with that kind of runway to do the things we want to do.
Right. I better make this statement. So yes, because I would always get inbound on this. So, yes, and I'm miserable. I'll get. And yes, I am frustrated, but yes, I still believe in the thesis, and I think that we just got to kind of be patient with this one, because everyone kind of points to the fact that if you're picking the right companies like yours, you've got Cameco and Orano and ISO's big balance sheets, and that's moving your projects forwards. If you or people who are actually already producing, so it's all kind of good. Those companies will do better than others. The ones I'm just frustrated at the kind of speed at which things are moving. I'm frustrated at the fact that the price isn't moving the right way, despite all of these setups that we're seeing in the sector on the demand side, and the fact that this kind of ever reducing production levels, would suggest that those who can will benefit, and those who are not able to demonstrate that perhaps may see a sort of drop off. So yeah,
I'd also not be, before it sounds like we're overly harsh on the developers right now. The fact, yes, it's taken time, and yes, there's been a lot of excuses for not being where they want to be right now. But most of those companies, if not all of them, were around back in the 2008 and 2009 when things kind of went south, and we did, in the middle of this period of development, if you will. There was a period of time when uranium prices were too low to do anything. So, we were dealing with a, $25, $30, $40 a pound uranium price that no one could afford to advance their projects overly aggressively at that point in time. So, there has been a natural lull in what they're doing. As we look at the time frame between discovery and production, we gotta understand that everybody did take a beat for a while in the middle of that process.
Yeah, like I think we sound today kind of like a lot of uranium investors feel, quite frankly. So I think we are reflecting the mood. Just so do we have any answers? I think pre-tariff time, you kind of maybe had some views about where this was heading in the time frame. I think this kind of tariff conversation has kind of maybe knocked the wind out of everyone's sails more broadly as well. But maybe we should reconvene in a week or so and see what the lay of the land is. But yeah.
I'll also add too, because you brought up tariffs, that I think, a lot of this protectionism and whatnot is not bad for the resource sector in terms of, I think in Canada now we're already hearing and seeing it, a lot more support for the resource sector. Nationally, I think we're seeing it in the United States. We're going to see it in countries where they're now going to start supporting their domestic projects a lot more aggressively than maybe we have until this point.
Yeah, I'm just reading a text from a fund manager here. It goes, I'm feeling, it's a fund manager, okay, a professional. They tell us, I'm feeling pretty beaten down, but trying to hold the faith in this market. Will it ever turn? There do seem to be a number of near-term factors which could turn uranium stocks. I just wondered how you're feeling. There's a lot of other bumps and bits and pieces to this, but that just shows you, like, even the best of us will feel at moments a bit beaten up. But it's never-ending, relentless grind that is the uranium space. But stick with it, folks. I'm sure these aren't your only investments. Just make sure you're backing the right horse and understand where that leverage is going to come from. Chris, onwards, right? Should we go do bigger and better things?
That's enough for now, for sure.
It's enough for now.
It's enough.
Okay, folks. We'll see you all next week. Bye.
Thanks a lot.